President Trump has indeed tapped Kevin Warsh to lead the Federal Reserve. The president made the announcement on Truth Social this morning where he touted the nominee's credentials. He noted that Warsh was the youngest person ever to be a Federal Reserve governor. For more on the announcement and background on Warsh, we're joined by Yahoo Finance Fed correspondent Jennifer Schonberger. Jen?
Good morning, Julie. That's right. President Trump has tapped former Fed Governor Kevin Warsh to be the next chairman of the Federal Reserve. The president saying in a Truth Social post when he made this announcement just shy of 7 a.m. this morning that he has known Kevin for a long time. He has no doubt that he will go down in history as one of the great Fed chairmen. And notably, the president saying he will never let you down. We know the president had been looking for someone who would be loyal to him, someone who shared his view that interest rates need to be lower. And Kevin Warsh is of the mindset that rates should be lower. He has been a Fed governor himself. Warsh was a Fed governor appointed by former President George W. Bush from 2006 to 2011. And it was during that time that we experienced the great financial crisis. And he acted as the liaison to Wall Street during that time. He has also worked at Morgan Stanley at M&A, and he holds a degree in public policy from Stanford with a focus in economics, as well as a law degree from Harvard University. And now the president had been looking at Warsh to be the potential Fed chair back in 2017 during his first term. He ultimately was steered by then Treasury Secretary Steven Mnuchin to go with Jerome Powell, something that the president has lamented on numerous times he felt was a mistake. So here we are a second time around. Kevin Warsh, now the nominee. As you mentioned, he has historically been a hawk. He has been one to raise interest rates in the face of inflation. Over the past year, he has taken a bit of a different tact. He said that the Fed needs to throw this notion of stagflation out the window, that we have a productivity surge that is being driven by AI that will bring down inflation and thus rates can come lower. And he believes any impact from tariffs will be a one-time occurrence.
And Jen, just quickly, it still has to be confirmed as well. And Senator Tom Tillis out this morning saying he is still on track to block a confirmation going forward.
That's right. This is a bit of a historical time right now because the Department of Justice has opened a criminal investigation into current chair Jay Powell over his testimony before the Senate last summer. And Tom Tillis, as you mentioned, has vowed to block any nomination by the president until that a criminal investigation is resolved. And there are other Republicans in the Senate as well who do back that. So that could be a bit of a fly in the ointment here that could prolong the process. There's no knowing how long that is going to take. But we do know that there is support within the ranks of Republicans for Warsh. So perhaps once that is passed, it should be a quick confirmation process to get Warsh in place.
We shall see. Jennifer, thanks very much. Jennifer mentioned the sort of history of Warsh here, that he served on the Fed during the great financial crisis, and there have been a lot of questions about his positioning during that time. But how do we bring that to today and try to extrapolate what kind of Fed chair this guy's going to be?
Well, I think the first question to ask is Kevin Warsh a man for all seasons or a chameleon? You know, he's traditionally leans to the hawkish side. He certainly has some, what we'll just call unorthodox views on the radical reduction of the balance sheet. You know, low rates, liquidity, and leverage are the holy trinity of modern finance. We've got a $31 trillion economy that demands a much larger balance sheet than what existed 20 years ago. A lot of times when I hear Kevin Warsh speak, I'm hearing an echo of 2007, where, let's just be blunt about this, he missed the mark. He was arguing for an overconcern and really too much of a focus on inflation at a time when the economy was experiencing a deflationary, depressionary-like shock, and unemployment was on its way to 10.1%. So there's good reason out there while Wall Street is looking at this, at least interpreting it early, as a hawkish appointment. And Mr. Warsh needs to be pressed inside the Senate Banking Committee on will he preserve the central bank independence? Just what does he mean by reducing the balance sheet? What does he want to go with reforming the Federal Reserve? And what's his views on things such as reducing the supplemental leverage ratio within the context of financial deregulation, which is clearly going to be one of the big things this year, Julie?
Okay, Julian, let's get to you because we are seeing yields come up a little bit on this nomination. How do you think what are the market implications of this pick?
Well, let's step back for a moment, Julie, and consider the horrendous inflation statistics we got at 8:30 this morning. And in fact, given those numbers, the yields are actually very tame. In our mind, Warsh is really the example of that Keynesian statement, when the facts change, I change. And he's been very quick to acknowledge the potential productivity boost to AI, which is something we at Evercore ISI are firmly convinced is in the process of occurring. And so from that perspective, he is likely to be less dogmatic than believed. And frankly, when you think about markets, the push-pull of Trump this week endorsing a lower dollar versus Bessent coming on and saying, no, we want a stronger dollar, and the perception of Warsh being a hawk, not necessarily at the short end with regard to interest rates, but at the longer end with regard to the balance sheet, is actually the countervailing force that keeps the dollar intact. And in our mind, the fact that the dollar is firmer here is really good news and ultimately will translate into good news for stocks.
And by the way, the horrendous inflation data you're referring to is producer prices, which were out this morning, wholesale inflation, which rose final demand month over month 0.5%, which is 0.3 of a percentage point worse than expected, higher than expected. So there you go. That's the backdrop that we're referring to here. Getting back to Warsh, Joe, does a Warsh pick make it more or less likely that Jay Powell will stay on as a member of the Fed?
I think it's probably less likely. Let me address something Julian just said there on productivity. Well, productivity is increasing, and we think we will get a productivity boom. This has to do with investments made during the 2021-22 vintage. What's going on right now with AI is not going to show up for many years. We probably won't even see that to 29-30. So if Kevin Warsh is out there making points about AI will allow us to keep rates lower than we otherwise would right now, let me tell you, that's a real inflationary risk. That PPI data, you know what that implies when we get the PCE data, which is what the Fed sets policy on? PCE is going to be at or above 3.1, core PCE well above that. And as far as we know, that core PCE number is the best long-run predictor of inflation. Let me tell you, this economy is not going to get back to 2% inflation anytime soon. We're going to be running at or near 3% for some time. And that's why Kevin Warsh has to be pressed on these views.
There are also implications of what you're talking about in terms of that inflation outlook. And Julian, what you're talking about in terms of the dollar for the metals. We got to talk about the metals this morning, Julian. And I know you've been getting a lot of client incoming questions about what's been going on because we have seen these soaring gold and silver prices, but today we are seeing them reverse in dramatic fashion. So what are you telling them when they call you and ask you about this?
No, and actually, again, the correlation between stocks and metals shifts in the near term and in the longer term, and in the lens of this week. Frankly, more clients want to talk about gold and silver than they want to talk about stocks, and it has really been a very tense conversation, wondering what it is that the metals show about the danger in other risk assets. And frankly, this action today tells you what they show is just an asset class that's gotten carried away speculatively, and some of the froth is being blown off. And to that extent, it's actually balm for the equity investor. The message is not as profound as one might have thought a couple days ago.
So,
and that's too is positive for stocks.
Sorry, just to put this a different way then, Julian, you don't think that the soaring prices that we have seen are reflective of some deep-seated concerns about, say, the long-term viability of the dollar?
Well, look, if you think about all the reasons that various investors might have for going into gold, and in our view, the dollar made a major multi-year top last year. And so from that perspective alone, the asset reallocation that we've seen, whether it's into metals or into international equities, is a logical outcropping of that top. But in our mind, this is in no means a sort of sell the U.S. Type trade that a lot of the people expressing more concern have talked about. And to that end, Warsh is actually calming for that aspect as a counterpoint to President Trump, who would prefer a weaker dollar on balance.
Great discussion, guys. Thank you so much for hopping on to react to this news this morning. Joe, Julian, appreciate it.
Thank you.
President Trump has tapped Kevin Warsh to lead the Federal Reserve, ending months of speculation over who would succeed Chair Jerome Powell. Warsh is a former Fed governor. He aligned himself with Trump last year by publicly calling for lower rates, despite being a longtime hawk. Joining us now, Ed Yardeni, Yardeni Research President. And of course, Warsh was also considered to be head of the Fed when Powell ultimately got the job, Ed.
Right.
So what do you think of this pick? What do you think the markets think of this pick? And what kind of Fed chair ultimately is Kevin Warsh going to be?
Well, he definitely has a great resume, without a doubt. He is a pragmatist, as you mentioned. He has had some experience of being a hawk. Now he seems to be a dove. But I think he's going to be flexible. I think it's actually kind of fascinating that we got a fairly solid citizen here as a nominee. It kind of makes you wonder whether we needed all the drama that came with it. Of course, it's not a sure thing that he's going to get through Congress, but I think he will, as long as the administration signals that they're going to back off on attacking Jerome Powell. Let him move on and let Warsh come in.
We'll see if that happens, Ed. I mean, listen, we certainly didn't need all the drama. But the guy in charge, he likes drama, Ed. So
he likes drama.
So I think that's what we can expect going forward. I'm curious, when you talk about Warsh's resume, I know that he has come under some criticism by some folks around his commentary around the great financial crisis, when he thought that the Fed should not be as stimulative necessarily with its balance sheet. Is there anything we can sort of say, draw any lessons we can look at from that time to now?
Well, I think most economists would agree that QE1 was a necessary injection of liquidity. The question about QE2, QE3 is very controversial. I agree with the position that we only needed that liquidity round, and the rest was not necessary. And zero interest rates were also an extreme abnormality back then. But that we all learn from our jobs, learning by doing. I suspect he's had a lot of that.
Yes, very fair point, Ed. Now, as you pointed out, we've heard some murmurings that Tom Tillis might try to hold up this nomination unless and until the criminal charges against Jay Powell are dropped.
Right.
Any market implications if this gets held up for a significant period?
Yeah, I don't think it's going to get held up, because I think the administration is going to back off on attacking Powell. There's no benefits in doing that. Powell's only mistake was that he didn't bring the project manager and an engineer when questions were asked about the renovation of the Fed. He clearly was out of his depth, and he just should have said, "I really don't know anything about that. I'll send you a letter." Right. So they got him on a picayune charge, quite honestly, and I think this too shall pass. Look, the administration's takes a tough, dramatic stand, as we just agreed, and then they kind of back off. They've done that on Greenland. They seem to be doing that maybe in Minneapolis. It looks like we're going to get a avoided government shutdown, and now we know who the Fed chair is. So there's a lot of uncertainties that actually are behind us.
Yeah, thank goodness. I'm also curious if you think that this Warsh pick makes it more or less likely that Powell will stay on the committee, even if he is no longer chair.
Well, I'll quote the Fed Chair Powell. I have nothing for you on that. Who knows? If I was him, I'd say, enough's enough. Let's go fishing or play with the grandchildren.
Yeah, I mean, according to recent reports, that is his strong inclination, unless he feels like he has to stay.
He doesn't really.
Yeah, I mean, I who could blame him, really, Ed? As for that confirmation hearing, when it does happen, what do you think the most important questions for Warsh are?
Well, I think Congress is going to dig deep into his loyalty to Trump. I mean, to what extent will he be independent of Trump? He should be completely independent of Trump, but clearly Trump has made it an issue. The problem for anybody who was going to be Fed chair is it's kind of the position got tainted by the politicization of the whole subject. So I think there's going to be a lot of questions on his independence. And does he agree that the Fed funds rate should be down to 1%? And I don't know how he's going to dance around that one, because that's what Trump's been saying he wants. And there's no way that other Fed voters agree with that.
Speaking of other Fed voters, Christopher Waller was out with a statement this morning explaining his dissent, which was quite interesting. Among other things, he said last year's data will be revised downward soon to likely show that there was virtually no growth in payroll employment in 2025, zero, zip, nada. And he said, let this sink in for a moment, zero job growth versus an average of almost 2 million for the 10 years prior to 2025. He says this does not remotely look like a healthy labor market. Do you agree, Ed?
Well, I think there's a lot of moving parts to explain what's going on here, and I'm not quite sure. I'm relatively sure that lowering interest rates isn't going to fix the labor market. There's issues with lots of kids coming out of school with student loans and with degrees that are very ambiguous about what their skills actually are. I think there's a huge mismatch between what the economy needs. So let's face it, we need a lot of plumbers and we need a lot of roofers and people in basic trades, and that's not what's coming out of college. So
what do you think? What do you think we fix? How do we fix that? How do you fix that labor mismatch?
I think time will fix it. This is a major technological change that's going on in our economy right now, and it takes a while for people to kind of figure it out and reinvent themselves. I think we're seeing part of the fix in new business applications. They rose to 5 million, all-time record high of 5 million last year. I think a lot of people are saying, the heck with it. I'm not going to bother sending another round of 300 resumes. I'm just going to see if I can raise some money from the family or a bank or a credit card, and I'm going to start my own business.
And Ed, you talked about all of the sort of like lingering uncertainties that we had at the beginning of this year, some of which are now seeming to be resolved. I know that you're looking for gains in stocks this year.
Yeah.
Anything that's happened thus far that has shaken you from that conviction, including the earnings we've seen so far?
No, I think the earnings outlook is great. The analysts thought it would be up 8% year over year coming into the fourth quarter. I think the numbers are going to be more like 10 to 12%. We've had really 3 quarters in a row now where earnings have been a lot better. We're going to have record earnings in the fourth quarter. I think that's pretty much a layup. We had record earnings in the third quarter, and earnings are really what drives the economy, in the sense that profitable companies expand. They increase their spending on capital. In the past, they used to increase their payrolls. And, the initial unemployment claims data and the continuing claims data give me some hope here that just as we've all given up on job expansion, suddenly it'll occur again. Maybe all that's been going on here is companies froze hiring until they figured out what AI could and could not do, and they're going to conclude that it can't do everything.
Let's hope that that's the case, Ed. Thanks a lot. It's great to see you, as always.
My pleasure, Julie.
We started this session today with news that President Trump has nominated Kevin Warsh to be the next Fed chairman. If you're out there, and I'm going to get this question for people, so I'm going to put it right to an expert like you. No pressure, right?
No pressure.
No pressure. Does Kevin Warsh, how much of a factor should he be when you're trying to pick a tech or media stock to invest in? Should you even be thinking about who the next Fed chair will be? Why or why not?
I mean, ultimately, it's going to be about policy and their view about interest rates. Interest rates are an important dimension to the way that the market thinks about asset allocation. So I think if his view is to lower interest rates and take a much more dovish stance around rates, that may be a signal for small cap. It may be a signal for some of the riskier, more unique areas of the market. It may also be pretty bearish for the dollar. That we've been in an environment where the dollar has been very strong, and so if we see that start to reverse, it could change some of the dynamics in the market.